Good afternoon, everyone. Andy here at trading-adventures.com with your Thursday market update. And quite a bit has happened since we last got together on Tuesday evening. Just to recap, Tuesday we were looking at this SPY facing its declining, just starting to flatten out 21-day moving average. And there was a deadline at 8 p.m. that evening, and the news started coming out early that a ceasefire deal had been arranged or agreed to, and we faced a massive gap up in the futures and the stock indices here on Wednesday, getting a decent amount of, actually a very strong follow-through day here, bouncing off the declining 50-day moving average and rising up to this upper Bollinger Band in today's action. So let's go through the numbers real quick and just focus on what price is actually doing. We don't know what the news is going to be. We don't know what's coming next. And we don't bother trying to predict. We're just going to take a look at what the price is actually showing us. And so far, we've got a strong gap higher followed by some continuation. Looking at the Qs, similar action, of course. We went from below the 21-day to above the 50-day, and it's a little crowded in here. The 50-day is this declining red line here. The pink line is the year-to-date anchored VWAP, and this orange line is, we could just take that off of there. That's probably not terribly relevant anymore, but we could add one here that ends up in about the same spot. So not only is price above these levels, but that could be some potential support if we should see some decline in digestion in coming days. We'll talk more about that in a few minutes. DIA right up against the year-to-date anchor here, above the 50-day, and finding a little bit of a pause here at this afternoon's close, or in the afternoon, with the price closing just below that. IWM is in pretty free and clear territory here. We've got some price action back in this neighborhood to keep in mind, but once again, a strong gap above the 50-day moving average, which is now starting to flatten out, and a strong follow-through day today, or an outside day after the dip from the open got bought pretty much all day long. So what have we been looking for and getting to this point, and what might we look for next? In the weekly chart articles and here a few times, I think what I mentioned would be the key to finding at least a short-term bottom in the action would be a series of higher highs and higher lows above a 5-day moving average. Tuesday, we had the higher lows, we had the rising 5-day moving average, but we didn't have much of a higher high yet. This spot here was a little higher than this one. This one was a little higher than this one, and so on and so forth. It took the news catalyst to really ignite things higher and send prices back up over that 50-day moving average, over that year-to-date anchored VWAP. And this is why we use the multiple time frame, because if you're just looking over here on a daily chart, how do you plan and prepare for what's going on when you just look and see the daily moving averages declining and starting to turn? It just doesn't give you a very precise set of reference points there. So that's why we go into the roadmap, which is that's what I call this chart, the 30-minute time frame of the indices. I quite often share this chart, which is a 1-hour view of the stock index futures. Same information in a little different format for the most part. And once again here, higher lows and higher highs above a rising 5-day moving average. That's what told us to be on the lookout for some continuation higher. We didn't know it was coming next. No one ever does. But once this happened, we start getting up in this area, not quite a new high, but a higher low. The 5-day starts to rise. Those are the subtle indications that you can start being a little more focused on the long side and look for a higher probability of price action to continue. So that's why we use these different multiple time frames. It helps us get precision. It helps us plan for the different potential outcomes. Looking at the Bitcoin market, a little bit of improvement here. Again, this was the Tuesday at around the time that I put the update out. There wasn't much going on here, but Bitcoin rose similar to stocks when the news came out, and now it's spent 3 days testing and probing this anchor from a recent high back in the middle of January, and we'll see if it can make any progress above that. The bond markets still pretty choppy and messy, but stable. They're not, if you want to call it that, they're not running away in either direction and trying to have some positive development there. Looking at the crude oil market, crude, of course, took a bit of a hit on the news while stocks were running, and notice where it came back down to. This anchor is from the breakout candle back in February 27, and it's been tested many times on the way up. So the uptrend is still very much intact here. This is not a broken chart. It's just some consolidation within an uptrend, which tells us that the higher likelihood scenario from here is that prices continue in the direction of the trend. Take that with a grain of salt as we consider the inverse moves there on stocks and oil over recent weeks. But however, the fact is the price action says the uptrend is still intact at this point. If that's going to change, we'll want to see a move below this recent low, below this anchored VWAP, prices staying below the 8 and 21 day. And then we might look for a test of this lower Bollinger Band or the rising 50-day moving average, that kind of thing. Gold continuing to consolidate here right in the halfway mark of this move from this slight dip back in October up to the all-time high in late January. It's just right in the middle of that move and trying to find its way. So this is just a longer term consolidation in the context of this bigger upward move there. And of course, silver's going to be about the same. And one more thing while we're looking at all the rest of the markets, the dollar selling off a little bit, not to be unexpected, and volatility coming back down as well. So what we see now is the headlines will still be a factor. Does the ceasefire last the proposed 2 weeks? There's already reports that it's been broken, or, again, it's a ping pong match. This stuff's going to go back and forth, back and forth. So tune out the noise, focus on the price action, and when you're looking at something like this, it wouldn't be surprising to see some of this gap get filled. Not saying it has to, but a little digestion, anything is possible. So for the next week or so, I think it might be even more important than ever to zoom into those smaller time frames. If SPY wants to come down, we have all these reference points here along the way. The purple is the week-to-date anchored VWAP, which is right about in the middle of this gap. Then we've got the 5-day, we've got the month-to-date, so on and so forth. So the gap doesn't have to get filled. If it wants to come down a little bit, there are potential levels to be aware of on that move if it were to occur. So that's all I have for you today. We'll keep the updates coming and take a look at the bigger picture over the weekend. Have a great rest of your evening.